Industry ETFs are exchange-traded funds that invest specifically in a sector or industry. Popular industry ETFs cover industries such as real estate, technology, healthcare, energy, and more. Industry ETFs have the main appeal of allowing investors to gain a broad exposure of an industry without needing to complete tons of transactions associated with buying many companies. In general, these funds invest in relatively simple and easy-to-track investment vehicles, therefore creating high levels of liquidity and minimal lag. Industry ETFs are some of the most popular ETFs out there, with many investment management companies having large arrays of industry ETFs. Industry ETFs have the following benefits: wide exposure to an industry at low costs. Because of the relatively simple nature of industry ETFs, these funds have low expense ratios and minimal fees for investors. As a result, these ETFs pretty closely track the broad range of companies they are meant to cover. Industry ETFs allow investors to capitalize on the overall gains of an industry rather than the individual company's gains. In general, it is easier to predict the performance of a sector compared to the performance of an individual company. Also, since industry ETFs include many different competing companies, if one company in the ETF suffers, odds are that the ETF includes many more that benefited. Industry ETFs also include the following negatives: lower diversification compared to other types of ETFs. While other types of ETFs may cover broad types of companies, industry ETFs usually include companies that are relatively similar to each other and likely will suffer from the same market effects. If, for example, the supply chain of an industry gets disrupted, many of the companies in the ETF would suffer. Another potential downside of industry ETFs are the limited gains. When investing in an individual company, if that company excels, your investment will yield a high return. With industry ETFs, if one of the companies does well, its returns are averaged down with the returns of the other companies. In summary, industry ETFs offer some interesting positive rewards with some unique downsides.